Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. It's Thursday, and here we are once again. And it's a strange one. I I stopped out um, of Tesla, and I moved back in, and it closed up a little bit, not a whole lot. Just it's still making its move, and I want to be in it. But you got to you got to take the good with the bad, and so there you go. I also entered Ford today on the breakout, which is kind of interesting for me, anyways, because it's not a normal stock for me. But it's breaking out nicely, and we kind of got. It looks like we got an opportunity there too. So I kind of want to get into some of the charts, but also we had a request from the Discord room that somebody would like to kind of talk to me a little. Would like me to talk a little bit about fundamental analysis today. So I'm going to be covering a little bit of fundamental analysis on kind of what I do and how I do that. I'm primarily a technical analyst. Basically, what that is that's looking at the charts and seeing, based on the charts and the volume and the price action, kind of where the stock price is going. But I also use fundamental analysis, to fundamentally look at kind of where the stock is positioned in the market. Most people are more familiar with fundamental analysis, like, how are the earnings doing and that kind of thing. So I'm going to get into that a little bit. Now, here's my criteria. I buy typically on the fundamentals and also on the technicals, but I sell on on the technicals. So I don't take in fundamental analysis when I'm selling, but I do take it into account when I'm buying. So that can be a very good way to to go about doing to go about buying stocks and buying them at the right place. Because if you buy a stock at the right place, many times you'll be rewarded handsomely, with the stock action. And you can be in all the right stocks, but oh, wait a minute, we have no sound, so I apologize. Thank you for that. Let's see if I get up here. Make sure my audio. And it's funny. I should. Let's. Okay, so I should have sound. Let's see if I've got. I should have. I, I should have sound here. So hopefully this will work. I'm having a little bit of bandwidth issues once again today. We just can't seem to get enough bandwidth here, but hopefully, that will fix it. But I really appreciate you putting that forward. So without further ado, get into stocks. The market is in a confirmed uptrend, and I just always want to put that out there because the fact that it's in a confirmed uptrend makes it possible to to really move in fully into the stock. Now, of course, it moved from a market trend under pressure to a confirmed uptrend. So we're in a confirmed uptrend. So this is a good time, to be moving into stocks. Now, here's the thing I'm going to show you about fundamental analysis of in terms of the stock. So here we go. Basically, the stock I'm going to analyze today fundamentally is one you have probably very familiar with, and that is Upstart, which is a company that I have been tracking, and I'm looking obviously for the right entry point into Upstart. But this is the one I'm going to kind of go over on a fundamental analysis basis. Now, what is fundamental analysis? Well, fundamental analysis, even though I'm showing you a chart here, fundamental analysis is based on the sales and the position that it is in, that the position that the stock is in the market. For Upstart, the for Upstart, the way it appears is that this is kind of a good idea of where it's been. Now, currently, Upstart has a PE ratio of 321. So if you've ever taken a class, if you've ever taken a class at a school, they'll always talk about PE ratios and how you should always look for a low PE ratio. Well, in the real world, we don't necessarily look for the lowest PE ratio. We look for a stock where the market is making a move and where the big funds are starting to move into it. But we do look at some fundamental analysis things, and that is sales growth. This little column here, this first little column here is sales growth, and it's by quarter. As you can see, back in June of 2000, basically a year ago, so it Upstart lost their sales were down 47%. But as you can see, coming into September, it went up, 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 and up. Now, typically, a stock that can make a 20% gain, 24% gain in sales every quarter, boy, that's one you want to look at. And Upstart definitely is in that category. In basically starting in September, it's in December of last year, the fourth quarter of last year, Upstart was losing money. As you can see, it was losing money, but all of a sudden now it's starting to make money. Not only did it the sales were the profits were up 40% on the quarter that ended on March 21st. And the most current quarter, the June quarter, the second quarter, the profits were up a phenomenal 999%. That's as far as it can go. So that's looking really, really good. Another thing that I look at very, very carefully when I'm looking at stocks is I'm looking to see kind of where the competition is. Now, this is the competition in this space. Credit Acceptance Corporation, Santander. Santander is a very large company, by the way. It's based here in Dallas. Regional Management. These are all very, very strong. Now, I'm always looking for these to see what the relative strength is of these companies versus the market. Now, what does that mean? Well, a 99 relative strength versus the market means that this company, Atlantic US, that's the name of it, is in the top 1% of all companies right now in terms of its strength against the rest of the market. So this with this stock, Upstart, the relative strength is it's very, very good. It's 98. So it's in the top 2% of all of the stocks. So I like to be in those uh, I like to be in those very, very good stocks, the ones that are basically 90% and above. So the group relative strength, this group is in the top 2% of all of the areas. So I'm fishing in the right hole. Also, you'll notice with Upstart, the number of funds that own these shares have increased basically every quarter. Last year, 53 funds owned. This year, this March, the first quarter, 150 funds. This June, the second quarter, 240 funds. And guess what? The last quarter that's reported, which was the September quarter, the third quarter, 278 funds. So money is flowing into this issue. That is part of the fundamental analysis. I want something that has high relative strength against the rest of the market, where money is flowing into it. It has increasing sales and increasing profits. So that's what I'm looking for. Now, this is the group that Upstart is in. Currently, it's the number 3 ranked group out of 197 different group sectors of the stock market. So I'm looking for something that's very, very strong. It's up this group in general is up 2.9% just today, and the year to date, if you were investing just in a basket of these stocks that are in this finance consumer loans area with, like, for instance, like an ETF, you would be up 81.93%. So that's very, very strong. Also, there's 31 stocks in this group. The new highs, the making new highs is 2. There's no new lows, and we are just very, very strong. So we are the stock rank in the industry group for this one, for Upstart, the relative strength is very high. It's 1 of 31. It's tied. Um, it's being accumulated, 3 out of 31. The uh, the comp rating, this is the composite rating, 1 out of 1. So this is just very, very good stock everywhere you're looking. So here I'm going to show you kind of by what of the 25, there's 31 stocks in this group, but there's 25 that I can show you. And you can see the top is this regional management company, very, very strong. It has a SMR, it has an EPS, it has a rating of 99. This is earnings per share. So I'm looking something that's very, very strong. So Upstart places number 8 in the list. So very, very, very good. The current price on Upstart, $330. And then the price change to the upside, $15. So as you can see, this is very strong in terms of a stock. So I'm also looking at benchmark criteria. Is the earnings per share greater than 80% of the market? No. And this is unfortunate because it just turned in this great quarter, but it wasn't quite as strong as some of the other ones. So it did fail there. But the relative strength was above 80. Of course, it's 98. That's what it is. It's being accumulated by the funds. It has EPS that's up more than 20% in the last quarter, which it does. Sales are up, yes. The current price is above $10 because funds typically will not buy stocks below $10, so it passes on that. It is 15% off of its all-time high, but it's above that 50-day moving average with volume, and there's 5 funds or more in it. So it's looking very, very good. This is the fundamental analysis that I typically go through on a stock. So with that said, um, you know, that's just one of the criteria of the stock. The next thing I do after I have done the fundamental analysis is I look to see what the chart action is, and this is the technical analysis. I'm looking at basically with technical, I'm looking at price action, that's up here, and I'm also looking at volume action, which is down here. Now, according to this chart, we have earnings in 12 days, and we've pulled down to the 21-day line, and we've bounced there. So my guess is coming into earnings, Upstart is very likely to move up to about this 400 level. So we may have as much as $70 price action between now and the time that earnings happen. Now, what'll happen typically is it'll move up to earnings, and then if the earnings are good, sometimes it will gap up, but a lot of times it won't. So what I like to do in this, if I'm buying a stock like Upstart, is I'll buy it. I will wait until the day of earnings or the day right before earnings, and then I will sell it because typically that's where it's at its highest level. So that kind of gives you a really quick study on, technical analysis. Now, by no means is this exhaustive because believe me, there are a million things that people look at when they look at technical analysis. Now, I would like to get into the stocks that I'm be buying today. Now, I did buy 4 today, but I also bought, my old friend here, which is Tesla, and I did buy Tesla today. And I basically, I got in, I got stopped out, and I got back in at about the 1,064 level, and so I'm up a little bit today. It was up tremendously. Volume is up again. It's still making a higher high. Composite rating of 99. So this is a stock right now that's moving very, very nicely. If you've been in it, and I'm sure you've done very well. Now, when I first started with Tesla, I was right back here, right below 900, right at this consolidation right here. And in about at the 860 level, I let it ride up, and then I got stopped out when it pulled back here. So I got stopped out at 1010. I've tried to get back in twice. I failed. But today, hopefully, it's closed and it's above that very critical, I think, 1,065 level. So hopefully, with this little consolidation, Tesla will move higher. But basically, I'm going to protect myself by just pushing that stop loss up and hoping that it will go higher. So that is one of the stocks that I am definitely buying today. Now, another stock that you might want to look at. This is the IBD stock of the day, and I highly recommend Investor Business Daily. By the way, I get a lot of my stuff from them, and I fully acknowledge everything that I get from them. But this is one that is an IPO. Now, normally I don't buy IPOs because initially when it comes up, it will run up and then it will pull down. So I want to make sure it's seasoned. Well, that's kind of what's happened with this company, Sentinel One, and basically it ran up from a nice from the IPO, and then it got a lot of the first holders sold it, and then it went kind of through the due diligence phase. That's what this is, and then now people are starting to come back into it, and uh, it has a relative strength of 91, which is excellent. But the other stock that we were just showing, Upstart, that has a relative strength of 98, so it's better. So this one is looking good. This the pattern on this one, it's what they call an IPO base. Typically, you don't want to buy an IPO when it comes right out of the door because you don't know if it's going to go up or down, but typically it'll go up and then it will get to a level, and then it will kind of do this cupping action, and then when it starts making the move, and this is the 40-day line. That's when you want to start getting into it. So it's about 3 months it takes. Now in this little chart, it's about 2.5 months, but about 3 months you want to wait for a stock to be ready if it's an IPO, and see how it's done over that period of time. But anyways, that is the stock of the day. For today. Just wanted to show you kind of where um, my allocation is on my portfolio currently. This is a small portfolio, by the way, and I do send out links to this that you can take a look and see how I'm trading it. But EOG resources, we're still in that. And by the way, this is a position trade. So each one of these positions is like a pizza slice, and there's 8 of them. So I typically have 8 positions. Now I have 7 positions allocated, and I have 1 cash position left to see what I'm going to do. So I have EOG Resources, Salesforce, Innovative Industrial Properties. I bought this one yesterday. This is the REIT that is in the marijuana growing business. They have the facilities that the marijuana growers lease from them. Very profitable company. So, then I did buy Ford today. I didn't show you that on the list because I just bought it as it's breaking out. Ford was breaking out today. It still's in a buy zone, by the way. Ford is in a buy zone. So I bought a position in Ford. CrowdStrike, of course, this is the computer software company, the computer security company. Very good area. Ternium, this is a steel company here, and then Denbury Resources is my second oil company. Now I have 2 oil companies. Why do I have 2 oil companies? Well, part of the reason I have 2 oil companies is the oil and gas E&P area, the chart I showed you, this is the number 2 area in the market. This is the best performing area out of, the number 1 is coal. There's not too much to buy there. And then there's these 2 that are buyable. So that's why I like to have my bets where the money is flowing in the market. And for the last 3 to 6 months, the money in the market has been flowing to the oil and gas drillers, primarily not the big integrated companies like the Exxon Mobils of the world. These are the smaller companies that primarily drill, on, not offshore, but just on land drilling, in the United States. Because of the price of gas, the natural gas, these companies have done extremely well. So that's one of the ones in there is Denbury, and then one of the other ones is EOG Resources. EOG has done a little bit better than Denbury. It's a little bit bigger company, but basically this group trades as a whole. Now, if you are interested in just buying the whole group, because it's really hard to figure out which one of these ones is going to be the right thing, you might want to look at an ETF called the XLP, which is basically this whole group. It's a Spider Select group, and basically it just covers the whole waterfront. So this is a good way if you just don't want to do stock picking. You just can look and say, "Hey, Jim, what's the best group in the market?" And I say, "Well, it's oil and gas." And they say, "Oh, okay. Well, if you buy Spider Select ESP XLP, you're going to get that whole group." So that's another good way to do it. It's just to look at which groups are doing best and then buy that ETF. And there's an ETF practically for everything. So I wanted to get into kind of what I'm holding currently. I did just show you the allocation in the small portfolio. Now I have other portfolios too, but these are the stocks currently that I'm holding. EOG, of course, we talked about that. That's up a little bit today, 77 cents, a little less than a percent. Salesforce is up again. Ternium, this is TX, which is the steel company. This is a foreign steel company, interestingly enough, and it trades with if you ever see this thing, it says ADR. That's American Depository Receipt, and what that means is that it's a foreign stock that trades on the New York Exchange through these ADRs, and it's up about 40 cents. So that's looking pretty good. Robert Half, I've had this one for a while. This is the temporary help company. This is probably the biggest company in the technical services temporary help business. Robert Half, and it's been doing quite well. Invesco QQQ. This is the top 100 stocks by in the Nasdaq, and that's been doing quite well. I use this one. I have money that I need to pay out within the next 6 months. For instance, I have some taxes and I invest them in the QQQ trust typically until I have to cash them out. This is not really a trading account. This is ETF, this QQQ. But I hold the QQQ so that, instead of just putting it in a bank and getting, I have to pay my property taxes in January. And right now I have the money to pay them, but I don't want to just sit it in a bank account because I don't make anything in the bank account. With the QQQ, I typically can get about 15, 20% on my ready money on a yearly basis. So that's what I do with this. So that's the QQQ. And sometimes I'm in it, sometimes I'm not, but right now I'm in it. So it's looking pretty good. CrowdStrike, of course, that's up. Again, that's the computer software company. Denbury, this is the one I was talking about. This is the oil company. It's up a little bit, 11 cents, not too bad. Innovative Industrial Properties is up as well. Today it's up $6.70, which is really good. And then, of course, I talked about Ford. Ford. Now, on this list, I didn't put, I didn't get time to update this list, but also is Tesla is on this list because I did buy that later in the day. So that's kind of what I've got currently in the market. So thank you for bearing with me with this. So let's get to the questions. Thanks everybody for holding. And let's get up here. And by the way, if you want to get on the action trailer, it's super easy to do. Just go to www Dallas Trading Floor. So Han says, "What's about thoughts on Twilio and DraftKings?" DraftKings is a cool company. I definitely like it. Let's pull up the charts here, and well, hopefully I can get it right. There we go. All right, so let's pull up those charts. Oh, I'm showing you all the stuff behind the scenes, and there it is. Okay, so let's pull up the chart. DraftKings. Okay, takes a second for I'm getting this freeze up on these you know. So I don't know why it's going on, but I'm getting some freeze up on the charts. So here we go. All right, we're still trying to get the. Hopefully, it'll give me the chart here in this. Just not doing it. Oh yeah, yeah. Okay. So here we go. Here's the chart for DraftKings, and we're looking at the weekly chart. So I'm gonna click over to the daily chart here really quickly to see kind of what the action is on it. Now I do have a reversal line that I have put in. I've been in this looking at this stock obviously for a long time, and I've owned it. But right now it's not a good time to buy the stock, and the reason it isn't is because it's below what they call the 200-day moving average. That's this black line here. The problem with the 200-day, the problem when a stock is moving below that 200-day line is that that means that the funds are moving out of the stock. So right now, the investment is not piling into this stock; it's actually piling out of this stock. So that's part of the reason we don't want to look at it because we don't want to buy a stock that is moving lower, and that's definitely the case here. This stock is moving currently is moving lower. There we go. Yeah. As you can see, the trend on this is going from like Seattle to Miami. We don't want to take that trip. We want to take a trip from Los Angeles to New York. That's what we want to do here. So right now, this is in a downward trend, not looking good. and it is below the 200-day line. So here's what I would do, Hans, with um, uh, with DraftKings. With DraftKings, I just think you've got to be um, I just think you've got to be super careful. And with DraftKings, I just it's not a buy. And that's just it's just really that that's just really it. It's just not a buy right now. We can't really do anything with DraftKings because it's below that very critical 200-day moving average. So I would not buy this one at this time. Just wouldn't buy this one right now. It's just not looking it's not looking good. Now Twilio, see if let's check in with Twilio, TWLO, and this is kind of a cool stock because it's in the sort of in the virtual telecom space, and it's done. It's had some very good action uh, on it in the past, but let's take a look at it now. This is Twilio. You know, it's sort of one of those things. We've fallen and we can't get up. Can't get up. So this stock has, as you can see, and hopefully you can see it. It's fallen. It went through these earnings, and boy, oh boy, they didn't like these earnings. Boy, the reaction was really bad from this. We had it move down just, you know, it just moved. Let's see, from about 350 all the way down to yeah. It just we just it just this action just is not what you want to see, and this is basically based on the this is based on the earnings. So this is why it's so important if you're coming into if you're coming into earnings like this one was. If you're not up 10%, I would highly recommend selling at least half of your position before earnings. And the reason I say this is because it can be a killer. You can give away you can give away all of your earnings very very quickly just by not selling not selling as a stock comes into not selling a stock as it comes into earnings. It sometimes just works out that way on you, and it's very 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 painful to do that. So with both of those, both Twilio and DraftKings, I would say no on that. Unfortunately, I would say no on that, and we can't we can't really do either. So hey, thanks Ella. Thank you very very much for looking at the show. Hopefully hopefully you're gonna hear this because I'm a little bit of bandwidth issues. Sorry about that. What are your thoughts on BTO? And of course, this BTO is Peabody Coal and Docs, and of course, let's look at Peabody first. BTU, very interesting stock. It's the number one stock in the number one group. And that is very interesting because I don't own BTU. It's one of the biggest. I think it is the biggest coal company in the world. But this is BTU, which is Peabody Coal, and it has been pulling back. It is true that they're selling a lot of coal, primarily to China and places like that, but it appears uh, it it appears that it's pulling back. So would I buy it right now? Well, relative strength is excellent in 99, but remember, the fundamental analysis is very important in this, obviously, and that fundamental analysis is that the coal group is the number one group. But you got to look at the technical analysis too. So, based on my formula of buying on the, looking at both the fundamentals and the technicals, when you're buying a stock, right now it would definitely be a check mark on the fundamentals, but it wouldn't be a check mark on the technicals. So I probably would not buy this one. This is in the number one group, but let's look at this whole group in particular because I think it's very instructive of kind of where the money is flowing in the market. And the thing about the energy coal group is that it's not a very big area of the market. It just really isn't. So it, this even though it's number one, this is a tough one to invest in. Here's what I would say with this group. I This is part of the reason I haven't invested in it is because of the size, and I'm having problems with my window gathering here. Hold on. The problem with this is even though this is in the best group, it just still has issues related to it has issues. So I would not be a buyer of this one, even though it's number one. So the current price is above $10. That's good. Volume is good, and the number of funds that are good, but the trend isn't looking good. Looks like it's going to pull back. So I would say no on I would say no right now on docs. I mean on P. So let's go over to docs and see if see if there we can get anything there. I'm a bit sorry about this bandwidth issue. I wish I'm directly plugged into the network too, which is amazing. Docs. Let's see if I can get a chart on docs here. Just there we go. And this is Doximity, of course. This is an interesting company. This is, of course, an online platform, for doctors, sort of a cloud-based thing, and it's kind of a cool idea. I do think though, just like with Teladoc, this area may have a lot of competition very, very quickly. Now, I did buy this one as it completed the as it completed the IPO base. This is what I've been talking about. This is what they call the IPO base. It typically will come up. It will come up to a resistance. It will cup, and then typically, if you want to get into a stock, it usually that's the place to do it. Now, unfortunately, when I did this one, I got into the stock, but it went down, so I was stopped out. I haven't been back since. Currently, the trend on this stock is downward. So we can't buy this one, unfortunately, right now. Even though I really like the area, the fact is the relative strength is getting better, but right now it's in a downward trend. So this is not something this is not something we could buy right now. Right now, this stock is basically um, it's in a downward trend. So don't buy it here. You really because what we don't we just want we want to buy stuff as it's moving higher, and it's not really a falling knife situation, but it's in a downward trend. And when a stock is in a downward trend, that's not a good place to buy it. It's easier, if you just use that rule, you're going to save yourself a lot of grief. And one of the reasons that you are is because if you're buying in an upward trend, you're going to increase the chances of success tremendously. So what I try to do is I try to screen only for stocks that typically are in the best areas of the market and are in an upward trend. And that way, I'm eliminating, some problems. And then from there, I'm further refining it down to the stocks that have the best price action and also are being acquired by the big funds. So that's kind of what I do. And so I'm a sort of what they call a swing trader. But sometimes if the swing trade goes well, then I will increase my position and hold it long term. But I am primarily a swing trader, and that's why I'm always wanting to buy the best merchandise that I can. Because remember, I'm typically not buying to hold it forever. I'm I'm typically buying it only to trade it. So I want to buy the stuff that I can kind of like a 7-Eleven. I only have I try to get the best merchandise that people are wanting the most, and that's the merchandise that I like to buy because because I'm going to be reselling it. So that's kind of the thing. I try not to fall in love with anything, and I try to just buy the things that somebody's going to want and pay a little bit more in a few weeks, and that's kind of what I'm looking for. Now, Apple did announce earnings. Apparently their earnings were not that good. Were not that good, but it still went up after hours. So this is the peculiar thing. Now now they say that it wasn't that good, but they've got earnings So maybe they missed on guidance. I'm looking at the fundamentals here. Yeah, well, they look pretty good to me. I mean, maybe I'm missing something. I heard, kinda through the grapevine that they had missed, but boy, it doesn't look like it here. Their sales are up 36% and their profits are up 100%. Man, you can't do better than that. I mean, I mean, it's been struggling as a little bit as of late. I mean, Apple's been struggling a little bit as of late, but boy, I like this action on Apple right now. I'm looking at the weekly chart over here, and I've sold my position. I've kind of been waiting for strength. Now, I may be a buyer of Apple because it looks like it might finally be able to power through that 150 level, and that's a key level for it. Really, the buy point for Apple though is about 157. It's right up here. But this is looking very, very good. So, I do think, based on this, after hours, it's off a little bit. It moved up. Yeah, this is interesting. So it moved up. Very, very interesting. So it moved up in anticipation of good earnings, and then it pulled back. Isn't that interesting? So this is part of the reason why I always say sell into earnings. Don't hold through earnings unless you have a 10% cushion. The reason is because a lot of times, no matter and I'm looking at this chart and I'm saying, wow, this is a really good chart. Wow, it should be looking a lot better than this. But, it's just one of those weird things. So I'm kind of moving the deck chairs around here on the Titanic. So that I'm not looking off into the distance like I was before. There we go. Kind of moving it. Yeah, there we go. So that's looking a little bit better. Maybe I can kind of do that. And then we're kind of just arranging things here on the desk. So yeah, I mean, it's interesting. Look at how much of a hit it took after hours. So this one might be a buy tomorrow. We don't know. But, this is still buyable, it's above the reversal line. Let's see how this bottoms, because this is definitely gonna bottom out, there's no question about it. Um, we're gonna see Apple bottom out here, and, it may be, kinda yeah, there we go. So now I'm actually okay, a little bit of a glitch, there we go. So now I'm looking more at the charts, than I was before. Okay, let's kinda there we go. All right. Okay. So, so Apple is looking fairly good. Let's look at Ford. Now, I did buy Ford. I did buy Ford today, and that we'll see how I did after hours. I haven't checked it in about 2 hours, so I don't quite know how my entry is doing. But okay, it's off a little bit in after hours. I bought it at 1703, which probably was a little bit high. It's pulled back, but it seems to be gaining some strength. It's off about 5 cents. 1680 after hours, a little bit weaker, but look at the volume. It's coming into it. This was the typical cup and then handle, and then it moved up. So hopefully this. I'm trying to get to see maybe lost my screen. Right. Let's see if I can somehow get back here. Golly. All right. All right. Let's see if I could just. Sorry about the folks. I'm having. Yeah. Hopefully I can get back into. It'll give me. It'll allow me back in. I just seem to be having some issues here. Okay, I don't seem to be seeing any of the. There we go. Okay. So let's see if it will let me. Oh man, it's just not working today. Hold on. I'm sorry about this. Adjusting the windows on my machine. I'm having some bandwidth issues here, unfortunately, and it's not letting me display um, these. Okay, hopefully this will let me. No, all right. There we go. Okay. Um, so let's see if I can. Let's see if I can get out and see this here. On. Come on, baby. There we go. Okay. I think I'm back now. Sorry about all that. But anyways, that is Ford. So Ford, we came in pretty good price, and hopefully it will hold. But I definitely think it's viable, and I also think Apple may be viable after this earnings. So now that we're through earnings, I think that's a very positive thing. So thank you for bearing with me with my bandwidth issues. Let's look at Facebook. Now Facebook has just been taking an absolute swan dive, and I just man, I it's been I don't know. I don't know what's going on with Facebook. I haven't been in Facebook really in a few months, so I haven't really been able to really been able to tell them that. But let's see if we let's take a look at the Facebook chart here. We just have this continuing downward trend, and it's right now. It looks like it may get some support. It may get some support at the 200-day line. Hopefully, I can. There we go. It may get some support at this 200-day line, but it may not. And so, I would just be careful with with Facebook right now. It's really not in a place that you can buy it. So, what I would say with Facebook is, Facebook just isn't viable here. And I don't know exactly on with them, but I think that I don't know if they have a drop in revenues. I'm not sure, but Facebook just isn't viable right now. It's really not looking. It's not looking good. The chart is a downward trend. Don't want to buy that downward trend. It's below the 200-day line. So I would just say you're going to have to, at least for right now, you're probably going to have to wait on Facebook. So I would not buy Facebook at this juncture. Just would not buy Facebook right now. Let's look at UNG and see we have anything there. And there we bring this up. There we go. Oh, this is looking good. Yeah, this is definitely something that this is an ETF that covers. I haven't been in this one, but this is a very good idea. United States Natural Gas Fund. There's going to be huge amounts of shortages of natural gas this coming winter. So this is not a bad idea. This is not a bad place. This is not this is not a bad place to buy. So I like the idea of this one, and it looks like it's bouncing off of the um, the 21-day moving average. I do like this a lot. This is a good idea. Nice checklist. 78. Now remember, this is not a stock. This is an ETF. So, but it's looking very good. I like I like the fundamentals, of course, on this, and actually the technical action is very good. It looks like it's come down, tested that 40-day line, and it looks like it's moving up. It's trading above that 21-day line. I typically like to buy when a stock pulls back to this 21 day line. That's a good place to buy it. So I think that Facebook, I'd say no, but with UNG, the ETF, the natural gas ETF. So I would say no on Facebook, yes on UNG. That's kind of how I would play it. Um, so it's just, Facebook just isn't viable now, but UNG definitely is. So that's looking pretty good. All right, let's take a question from TikTok. Thank you very much. Thanks for holding for all this stuff. Amazon is dead. Well, Amazon may be splitting. I heard a kind of a rumor, and I don't know if it's true. Um, Amazon might be splitting. Let's look in on Amazon because that's a key stock, and I don't own it right now. But if there were any stock that was ripe for a that- if ripe for a split, it would be Amazon. I don't know if they're going to do it, obviously, but one thing I am seeing here is that there looks like there is a reversal, and it looks like it's reversing off that 200-day line. So this is good action. It's moved above the diagonal here. That's the reversal line, and it's bounced off the 200-day line. So this is actually pretty decent action. I want to look at the weekly chart for Amazon to see kind of if there's anything that we can kind of glean from it. It's been relatively flat. It's in this consolidation range on the weekly chart, and it looks like it's possibly heading up once again. So if we're looking, solely on a sort of a swing trade here, you possibly could do a swing trade here. Buying it basically about this 33.19 level. Boy, it's off a lot. Look at that; it's off 3%. They just went through the earnings. I guess the earnings just doesn't look good. Let's look at let's go and see if they've posted the results. Just does not look good. Yeah, well, no, look at that. It's the sales are up 27% and the profits were up 47%. But God, the market didn't like that. Can you believe that? Big sell off. This is also why, again, I keep reiterating this, but this is why um, you want to sell in things and then wait for it to come through and see how it's doing after earnings. And then that's where you want to kind of possibly come in. So if you're not up 10% on earnings, be really careful and possibly consider selling before you go through earnings, and then that way you can keep some more of your money because you know a lot of times what'll happen, it'll come through earnings, it'll disappoint, and then boom, it will come right back. Now I sold my shares of Lending Club primarily because because I was doing the same thing. This is an example of I'm not always I'm definitely not always right on this one. I don't I sold my shares of Lending Club basically, and then boom, earnings were excellent. It went way up. So we might have a new opportunity here. There isn't really a good base pattern to buy this one off of, unfortunately. I did buy it. I did buy this one. Basically, it wasn't really technically a correct, a proper base, but I did buy it right in here as it made. Yeah, I did buy it as it moved above 33.30, and I wrote it up there a little bit, and then I put my stop loss very tight, and then I got stopped out. See there, my stop loss was at 42. Yeah, at 42, and I got stopped out. So, you, I may be back in this one. This is looking very good. It really ran up into it right before earnings, and then it pulled back a little bit. So, let's just kind of see how Lending Club traded on the 30-minute chart to see kind of how it looked. Because I wasn't looking at this one today. Yeah, look at that beautiful gap up today on earnings, and then it pulled back. So this one may get some support at about 39. So we shall see. we shall see what happens. What happens with Lending Club. So that's a good one as well. ALCS. Don't know about ALCS. I don't know this ticker offhand. Let's take a look. And no, ACLS. I'm sorry. My mistake. ACLS. And again, I didn't recognize this ticker right off the bat. There we go. Excelis Technologies. Huh. Okay. Well, that's interesting. Um, Excelis is dry strip and other precision process equipment for the fabrication of ICs. Okay. So this is an IC equipment company, which is very good. It definitely is pulled right into the buy zone. That's excellent. The pivot on this one was 5280, which is very good. 5280 on that pivot, and yeah, it looks very good. It looks very good. Relative strength is 95. But the earnings are in 6 days, so I probably wouldn't buy this one. Probably wait through it to go through earnings, but it's looking very good. This is definitely watch listable, no question about it. This, you could definitely watch list, ACLS. You definitely could. It's got a 100% checklist. Look at that. Wow, that's really, really good. So, I think, with this one, because it's really only because of the earnings that I would do this, but because earnings are so close, I would watch list this one, so watch list for now. That's kinda that's kinda my take on this one. This is very good. I wasn't aware of this particular stock. Wasn't really, familiar with this, but it's looking very good. 100% checklist there, which is something you don't see a whole lot of, and, very, very nice action on the chart here. So very good. Very, very, very good. Alright. Well, thank you for that. I'm definitely putting that in my watch list, Excelis Technologies. Interesting, interesting area. So thanks for bringing that to my attention. Let's see, take a question. TikTok. Um, oh, Facebook changes name to Meta. It will go big. In the maybe. I mean, the metaverse. That's a big deal. We'll see. How they do. They're off today. More likes. Okay. Thank you. Thank you for liking me. By the way. If you're watching right now, super duper easy. I'm actually showing all these charts on. I'm showing all these charts on the on here, and it's on Facebook. It's on at this address, um, and which is HTTP. It's this address right here, bit.ly/DTF 410. So if you go to that address, you'll be getting a live feed of the show as it's going on. So thank you for that. All right, let's take another question. Thanks for holding here. And this is, let's see, is it too late for Tesla? Well, Mary, I don't think so. I mean, it's extended, and I've been buying it. Um, so I don't think so necessarily. Now here's if you're going to buy Tesla, it's gonna move around a little bit because it's moved way up. It closed today. Let's see what we get after hours price. At 4 p.m. at the bell, it was 1,077 a share, and after hours, it's pulled back just slightly, but not a lot. So I would say that it looks like you possibly could get in. Now, here's the thing with Tesla, and again, I'm a big Tesla fan. Here's what I would do. I would do a kind of a special order on this one, and that would help us get into it at the right price. And this is sometimes the way I will buy a stock. It's what they call a buy stop limit order, and the way that works is that it's a special kind of order that if the stock price goes above a certain price, then it will buy you in at at another price. So here's what I would recommend if you want to get in to Tesla. I don't think it's too late. I really don't. I would set a buy stop limit order for the stop equaling $1,079, and then the limit equaling $1,079.10. Well, what do I mean by that for this? But this is how I would get into this is how I would get into into the stock. I would set this special kind of order. It's called a buy stop limit order, where the stop would be equal to about 1,079, and then the limit order. And what I'm going to do is I'm going to switch over to the daily chart. I have this marked up with a lot of stuff on it, so it's kind of hard to see. So I'm going to move over to the daily. Yeah, there we go. As you can see, and this shows it better. This little dotted line here is 900. That's where it moved through its pivot. I still think it can move higher. As you can see there, I bought in at 1072.83 today and set my stop loss at 1042. Okay, right here. So, but I still think you can get into the stock because it probably is going to pull back a little bit tomorrow, but then I think it will continue its journey up. That's why you want to use this buy stop limit order because it will only actuate if the stock moves above 1,079. If it moves above 1,079, then it will immediately place an order for to buy the shares at 1,079 and 10 cents. So it only will activate, it'll only buy your shares if it moves higher. Currently, the price is 10.77. So in the after hours, it's below. So if tomorrow, so this is so, so that if you do this kind of order, if tomorrow, for instance, you would just buy it at market. Well, it could possibly go down. But if you do this buy stop limit order, it gives you a little protection because as the stock moves higher, it will buy it in at 1079. Now, as it's bought in, you want to immediately come in very quickly and put a stop loss in very, very tight within maybe 2% of where you bought if this works. But this is a little bit safer way to buy it down. Now, this is extended and it's above a normal buy point. So this is not necessarily the best place to buy it, we may not get another chance. So if you use the buy stop limit order, you might be able to do something. Let's look at Snap. This is probably going to be the last chart for today because I'm afraid I'm almost at the end of time. I could just go on for hours with this. You probably couldn't stand it, but I do. I do enjoy it. So Snap, SNAP, and let's bring that chart up, and hopefully we'll get that one up right now. SNAP. Hopefully that will bring it up in just a second. A little bit slow on the take. Yeah, it looks like, we had those earnings and then just fell, and boom, we've gotten some support right here, just above 50. So currently it's at 54.17, and it looks like it's getting some support. Would I buy it here? No, I would not buy it here. Would not buy it here because it's trending below the 200-day line. So right now, I just wouldn't buy. It's not a good time for Snap, unfortunately. Um, so would not buy Snap right now. So that's just really the thing. So don't buy Snap at this time. So I can't recommend buying it because it's below the 200-day line, and it still hasn't. Oops, it still hasn't. That was for Tesla. There we go. So don't buy Snap right now. Just not a good time. Not a good time to be buying Snap, unfortunately. Like the stock, don't like the chart action. This fails on again. This is a classic case of it definitely wins on the fundamentals, but it doesn't. The technical action is not good on this stock, so I would not buy this at this level. So that's that's kind of the deal for Snap. I can't really see it. All right, let's probably take one. Oh, the sounds okay. Baba, Twitter. Thank you very, very much. Okay. Um, sounds okay on the phone. Isn't that interesting? That's weird. I wonder why that's the case. Geez, sometimes I have issues with this. So I don't know what's going on with that. I'm having a little bit of bandwidth. Let me see. Make sure that yeah. I should be broadcasting on now. Just check the camera again. Yeah, that camera's good, and the audio should be fine. So sorry about that. But don't buy Snap right now. Yeah, that's just kind of my take on it. So I would not buy Snap at this time. All right, probably one last question here. Let's look at. You have sound probably is. Oh, okay, okay. That okay. You have sound. Okay. Sorry about that. Yeah. So Snap really isn't a buy. Be very, very careful about this, Shalish. Just really do it because it's below the 50-day line. So no on Snap, unfortunately. All right, let's take a look at STNE. See if there's anything there. STNE, and hopefully that'll come up. Ah, there we go. Stoneco. And this was a cool one. I did, this is in the financial services area. It's a Brazilian company. It looks like did they just go through earnings now? Yeah. Unfortunately, right now, this is just not the one you want to buy. Ouch. This is no good, unfortunately. So, unfortunately, with Stoneco, I have to say, you don't want to buy it. You just don't want to catch a falling knife on this one. So, I wouldn't buy this one. Yeah, shoot. Because I like exposure to the Brazilian market. I think in the next year or two they're going to do very, very well. I like a lot of the companies, but boy, I just can't recommend this one. Unfortunately, Stoneco, you just can't catch a falling off. It's just gone down. It's below the 200-day line. So I just have to say, ouch! It's not working. it's it's not working, unfortunately. So I can't I can't recommend Stoneco. Well, if you want to get on the action trailer, it's super duper easy to do. Just go to www.dallastradingfloor.com, and this show is bit.ly slash DTF 410. So that's the number of this show. If you want to take a look at it again, and all of them are archived on YouTube, so it's super easy to do. If you go to DallasTradingFloor.com, a kind of a cool thing. So I'll kind of show you that really quickly. And this is our um, this is our action trade alert. Well, hopefully it will let me do that. No, no, does not want to let me do that. I'm doing something wrong there. That's for sure. Well, maybe if I do that and let me go there. Okay, that seems to be the issue. So if you go to DallasTradingFloor.com, it looks kind of this. It's going to look kind of like this. And this is our free action trade alerts. So if you just put in your first name, SMS if that's how you like to be contacted, and your email address. By the way, quit anytime you like. So just so I can put out the action trailers, I'm gonna probably send out the ready list probably today or tomorrow. And this is a good place to look for stocks that are getting ready, getting set up, that are looking good. Also, this is the broadcast today, Dallas Trading Floor number 419 there. And then we also have down here the list of the highly rated stocks under $10. Now, the last time I updated this was on October 22nd, so I may be having some more information there as well. But look to Dallas Trading Floor to find out. We do have a special trading service now. This is a pay service. It's $30 a month and well worth it. A lot of people have had some very, very good results being on the special trading line. And I trade with this open all day, and I try to answer all the questions I possibly can from everyone. And it's not just me. There's many great traders on that floor that have that on this that have done extremely well. So it's not just me. It's other good traders, and it's a great place just as kind of a sounding board to bounce ideas and that kind of thing. If you want to learn the system that I use, it's called Can Slim, and I have a link to it right here in the Dallas Trading Floor site. But basically, what this is, and this is the system that I use, and this changed my life, by the way. This is How to Make Money in Stocks: A Winning System, Good Times or Bad by William O'Neill. And this, if you take and you look at this and you read this, you will start to understand a heck of a lot about the stock market. Don't just guess. That's the thing. What William O'Neill did, in the 1960s was revolutionary. He took every stock and he ran it through a battery of tests using an IBM 360, if you can believe that, punch cards, and he discovered which are the most winning stock patterns. He is really, he's not the first one for technical analysis. That probably was Jesse Livermore, but he's one of the greats in terms of technical analysis. He's one of the great traders of all time. He's now retired, but the IBD, the Investor Business Daily, is based on his system. So highly, highly, highly recommend getting a copy of this book and just kind of looking at it because it will pay for itself many times over. And of course, if you're in the Discord room, we hope that'll pay for itself too. So that's also available at that site. So until tomorrow at 3:30. I'm going to sign off now, but let's see if there's any last questions. Want to become famous? Well, I hope that. Let's do one last one on. Thank you for Matt, man, on Lucid, and let's see because that's been going up tremendously. And here I was poo pooing it. So well, so let me go to the charts on that, and um, let me pull the charts back up. Let's do Lucid, kind of the last one, and pull those up in just a second. There we go. Hopefully we'll get through that. There we go to Lucid. So now it should come up here. And this is Lucid. Um, it's just really, really moving. I think basically for Lucid, I would buy it potentially above 40 right here. So we definitely because basically what's happened is an IPO. It's an IPO base, and it's now come all the way back up. And so we want to start possibly looking at this at the higher high. Now, after hours, it's up a little bit, so it's got a lot of strength. There's a lot of people that are wanting to buy this, um, and so I do think with the relative strength of 97, we possibly could start nibbling on this possibly tomorrow. It's only got a 56 checklist, which is a little bit concerning to me. This is an IPO. This company does not have any profits or sales. So that's it is a big risk. As you can see, this is the reversal line that I've drawn. Basically, the top of the consolidation is right about here. It's about 42 or so. So the question is, can you buy this? Well, let's see if it can hold this number. Let's see how it opens up tomorrow. I want to see if it can hold on to this and move higher. So, yes, you could probably definitely could buy it, but I wouldn't buy it right out of the gate. I wouldn't buy it within the first 2 hours. Let's see if it can move above this price, this 36 range. So, here's how I would look to possibly buy to possibly buy Lucid. I mean, and it's very interesting. I would not buy a full position on this one, but what I might do on this one is a buy, stop, limit, oops, order, where the limit, or in other words, this is where the stop. That's where this is going to actuate would be equal to about $40. Okay, and the the limit would be equal to $40.10. So why again? Why would I do it? Why would I do something like that? Well, the reason I would do something like that is we only wanna buy a stock like this as it's moving to a higher high. So, if tomorrow it opens up and it kinda poops out, we won't buy it. But if it has some more juice and it moves up through 40, then we're gonna buy it. So we only wanna buy it as it's moving up. And the way we can do that is with this buy stop limit order. So that's how I would handle Lucid, but because it's a very, very interesting stock. I'm in Lucid currently, but I may do that because I've always want to buy on an upward trend. And if it doesn't make that $40, you see, then we won't buy it because it won't meet that stop limit. So basically the way the buy stop limit order works is that if the stock goes up to $40, then it will offer to buy those shares at $40.10. So it's going to capture it as it moves through a resistance. So that's kind of how I would say I would do lucid. But for right now, I would probably be a little bit more circumspect, and I probably would not. I would not buy it until I saw a little bit more power. See if it has any staying power. Well, thank you for watching the show. I'll be back tomorrow at 3:30, same time, and I appreciate it, everybody. And do oh, by the way, we do have the free action trailers. It's free. It's of course just go to DallasTrainingFloor.com for some more information.